Okay, so what are the framework and what are the criteria to frame the trade? Okay, so that's a checklist. Frame the daily bias at the higher time frame, okay, and weekly and monthly too. So in this case, we are just analyzing the daily bias, and in the intermediate time frame, which is the H1 time frame, okay, we're going to just look for the structures, and in the lower time frame, we're going to just enter up. Okay, so we need smooth edges. Okay, so all credits to the MMXM trader for every concept that I just learned, and yes, I'm grateful for that. So it is a daily chart. Okay, so you just need internal range liquidity and then external range liquidity. Okay, so ERL to IRL, IRL to ERL. So in this case, the price just took the external range liquidity and just drawn to the internal range, right? And in the H1 time frame, you can see that there's a change in the state of delivery, and the H1 FVG, and the M5, that is the entry, and that's gonna be the best entry ever. Okay, so here we are on the Nasdaq time frame daily. You can clearly see that that's the daily FVG, right? And that is a draw on liquidity. Price is actually in the premium, right? And the H1 time frame, you can clearly see that this is the daily internal range liquidity, and it just disrespected the bullish fair value gap, which turned to the inversion FVG, right? And that is our hourly dealing range, and that is our internal range liquidity for the sell. And we have this stop hunt, right? So if I just go to the lower time frame, you can clearly see that is a 9:30 time, which just manipulated the highs. So this is really important when it comes to Nasdaq. Okay, you just need a 9:30 manipulation every single time, and you can just easily frame a trade there. And you can just put your stops at the highs. That's the time, okay? And 9:30 will be the best time for the manipulation. Or if it just manipulates before the 9:30, it will be the distribution. But you just need the manipulation of the 9:30. That's it. Okay, just wait for the 9:30 to pass. So you can just enter up here. Okay. And this is the daily internal range liquidity to the external range liquidity example. You can see that this has the daily internal range liquidity, and here we have the external range liquidity, right? And in the 4-hour time frame, not only you can just use the hourly time frame and then the M5 or the lower time frames, you can just use the 4-hour time frame. I'm going to just combine the Blitz model and this 9:30 time frame, sorry, the 9:30 time window with this model, okay? So you can see that this has the 4-hour fair value gap. And in the M15 time frame, you can see that there is a nice dealing range where MMXM trader called out on the Discord and below midnight opening price. And then you can see that there's a 9:30 opposite side run. Okay, so here's a tip for you. When you just frame a bias and you just know the draw on liquidity and you just framed, you need opposite side run. Let's say here we have the buy side liquidity, right? We need opposite side run, which is a sell side liquidity run or opposite side run into a key level. And that was an SMT here. Okay. And we just need the price to be the expansion reversal here and then expansion towards the height. Okay. On the M1 chart, you can see that 9:30 just opened up, right? And that was a manipulation. And you don't really need to care about this SMT or this manipulation. Like, you don't really need to think about that until it hits the high time frame key level, which is the intermediate time frame key level, which is M15 internal range liquidity, and then prices in discount, right? You just need to be patient here. And then the M1 structures. Change in the state of delivery with inversion FVG with the displacement, right? And that was an SMT here with the ES. I think so, yeah. And then we have this buy side run. And that's all you need. Okay, we are on the 4-hour time frame. All right. So SMT at the lows. This is a Friday's price action. This is optional trade because it just took the buy side liquidity and then took the previous day high, right? So personally, I didn't actually look into this price action, but this was a good example. All right, so in the 15-minute time frame, you can see that this just has a manipulation at 9:30 a.m., right? And that was a buy side liquidity, which is an Asia session high, and then this is the London session high. So with the 4-hour bias and M15 structures, you can see at the 3-minute chart, Low risk buy has been printed, and this price action was actually the high resistance liquidity because there was no low resistance liquidity, right? Run. This is a high resistance liquidity run. That's why I didn't actually position myself into this trade because this has no low resistance liquidity but the session highs, right? S&T with ES 930 opposite side run, reversal, expansion into reversal. What is the market cycle? Consolidation, expansion, retracement, expansion, and that was a massive consolidation. Key time at 9:30, it just expanded, right? Expansion into manipulation, and that comes a reversal. And with the reversal, that is a retracement. And then the consolidation, the hard consolidation accumulation led to the expansion, right? That's it, the example. I'm going to just combine the Blitz model into this model. I mean, this time frame, the 9:30 time window. Okay, let me just quickly hop into the charts. Okay, so what you need for the Blitz model, you need a distribution candle on the 4 hour. Okay, it can be fractalized. All right, so if I just frame a bias here, let's say this is the internal range liquidity, right? And this is our draw on liquidity for now. If it just really has there's a Tuesday price action, you can see it just took the previous day high. The Monday candle took the Friday's high, and ES it just closed inside, closed below. Okay, and if I just go to the 4 hour time frame, which is it can be the intermediate time frame here too. Okay, to find out the swing point, and you can clearly see that it just made a swing point, right? 1, 2, 3. That's the swing point. Remember the next day model and then the next candle model from the MMXM trader. Everything came from the MMXM trader. Okay, that is our inversion FEG here, right? It just got disrespected at the 2 a.m. 4 hour candle just disrespected this. And here you can see that 6 a.m. just opened up, took the London session high, which is in this candle is a open high low close candle, which is a classic sell candle towards this daily FEG. That's how you just frame the bias, right? And this is now the distribution candle here. So within this 4 hour candle, we need the H1 previous candle run or M15 FEG or M15 stop hunt. Okay. So if I just go to the hourly time frame, if you are unaware of the Blitz model, I highly recommend you to watch the MMXM trader video before watching this. Okay. You can just really pause this video and watch that and can just continue this video because you don't know the Blitz model, right? And if you know the Blitz model, just continue this. Sorry. So here's the 4 hour candle. Within this 4 hour candle, you can see that it just manipulated this high and then the previous H1 high, right? Previous H1 candle run and then the M15 stop hunt. Let's go to the M15 time frame, right? Exactly the M15 stop hunt here. So this is already a distribution candle on the 4 hour, and that is our manipulation M15. And there we go. If I just go to the 3 minute or 1 minute time frame, you can see that just give the entry. That's our entry. Okay, the distribution phase. So accumulation, manipulation, and distribution phase. Okay, so with the what is this low? 5:42 a.m. low, and that is our previous day low, and that is our daily FEG as a draw on liquidity. Here you can see that is a low resistance liquidity run. Sorry, a low resistance liquidity, which is smooth edges, right? So it'll be the massive expansion because of the liquidity. That's it. That's how you just frame the Blitz model. Okay, I'm gonna just simply go to the next example. Okay, and this is a reversal here, but I don't really, let's say, there's a 15-minute structures, right? 15-minute. So it can be fractalized. So that is our 4 hour. So if I just go to the daily time frame, right? This is the daily time frame. And what is this? This is Monday, which you just took the previous candle low. right? And then we have this distribution phases. You can see that is our 4-hour FVG. And in the hourly time frame, it just took the previous candle run. Sorry, it just took the previous candle, and then the 15-minute we had this structure, right? And we can just really focus on the 30-minute swing point, maybe. Let's say, yeah, it would be much better if we just close this inside, right? And there we go. That is our distribution phase here, retracement and then expansion higher. But I just took a trade here, which is a 1-minute entry with the MMXM trader, right? That is our entry. That's how you can just really combine the blitz model, okay? And yes, that is our 4-hour swing point and the H1 distribution. So this is how you can just really combine everything together, okay? And in the next video, I'm gonna just combine these things with the market cycles, and then the additional insights will be there, okay? Additional insights will be there, I promise you. So hope you just enjoy this video. See you in the next video. Bye.